They are going to sell. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, we're focused on how the machines are positioned and how they're looking at the market. Are they poised to take stocks higher, or are they in a position now to take stocks lower? And while many people believe the market is driven by earnings and fundamentals, there's so much money behind these trend-following machines that they're the ones that are setting the direction of the market. When the trends are up, they're buying, and when trend shifts, they flip into sellers, and in a big way. And what we can see in the market now, as we've talked about this for weeks, that these machines have been buying, and buying. But all of a sudden now, we're starting to see evidence that momentum is slowing down. So as we look at the technicals and momentum of the broad market and bonds and gold today, what we're going to find out is the machines now may be in a position where they're capped out in the short term and are going to be looking to sell. And something you may want to also know, we do have a sponsor for today's show. I'm going to give you 7 reasons why you might want to add this stock to your portfolio. If you're interested, stay tuned to the end. Now let's head over to Goldman, and where we like to pick up the story every week and look at the flow of funds and their models, and then we'll take a look at Nomura, TD Securities, and then our own data. So here we can see from Goldman late this week, the S&P recaptured the CTA short term. So here you have some numbers. 39.14 is their short-term signal. A medium-term signal is 39.65, and the long-term threshold to the upside now is 4,083. Now, the way you read this, of course, is if that long-term level is breached, well, it will bring more buying. But if momentum doesn't flip here and drive the market higher, well, what you can see if the market goes down a little bit, it will start to trigger those short-term and medium-term signals that will lead to more selling. So that's how you look at it. But now let's look at the bigger picture, which we have from Goldman. They note that CTAs are still buyers globally, keyword there, globally, but big drop-off. S&P is better for sale now, suggesting machines are about to sell. And they note that the S&P 500 has $15 billion for sale over a flat tape this month. Now you're talking about $3 billion a week. But let's look at what's going on here when they talk about buying globally. We look over the next week and we note that in a flat tape, if the stock market just goes sideways, there's still $17.6 billion in buying. And you say, well, that's a pretty big number, until you realize that 11.8% or 11.8 billion of that number is all focused on Japanese stocks. So what you can see now is momentum is building behind the Japanese market. The machines are starting to pick that up. But for everyone else, well, they're pretty neutral next week with minimal amount of buying across the board. Now let's take a look at the flat tape, because what we see here over the next 1 month, 15 billion of selling just for the S&P 500, being offset by 15 billion in buying over the month across the broad market. So what you see is a concentrated potential sale coming for the S&P 500 if momentum doesn't continue to drive the market higher. Now, something going for the market in this case is on Friday. We note that the corporate buyback blackout window for most of the S&P now starts to end, and we expect those flows to come back. Of course, we'll have more data on that as it comes. Let's take a look at Nomura. If you're wondering why this is grayed out, this is proprietary information, and I do not have permission to publicly show it, but we can talk about their positioning a bit. And what we can note here is they are long. So these algorithms that Nomura uses are very fast. They're long right now, the market at a big way. And so if momentum were to shift, what we could expect from them is their products to start to sell as well. As we head over now, we'll get to TD Securities. We can still look at this chart from last week from Nomura and their positioning, saying that they're fairly long, but not as long as they could be, notably saying that if the market can go higher here, that more machines will buy into this. Now let's take a look at TD Securities, and they're in a position too now where we see that they're neither buying nor selling here. They're in a case where they're kind of in a lull. Either the market goes higher and they continue to add, or it goes lower now, they're going to be sellers. So what I want you to take away so far from this is we're kind of in the middle of a dead zone in terms of momentum. If it plateaus here and doesn't shift, we'll see the machines start to capture their gains and turn into sellers. If the market drives higher, of course, we'll look at those levels here again in a moment. Then what you're going to see is a big flood of this money start to come in. Here we can note the S&P 500 closed slightly over its 200-day moving average on Friday. The failure to hold and rally above that will cause a cascading effect of CTA selling as they back off their long positions. Keep in mind, over 4,000 is really where you want to see buyers. We note that Goldman mentioned 4,083 on their long end target, still under 3,700 to sell, but that number is going to go up over time here. All right, let's take a look at our own screens and get into the charts here. We've got the S&P 500 symbol SPY. It is worth noting it did not close over the 200-day moving average, just underneath it, but the broad index did. Momentum remains positive. What we're looking for is an RSI over 40, sitting at 56. The MACD, a nice momentum indicator, has got a positive cross. And my Momentum Timer Pro, this is my proprietary report that adds even more signals to it, and it has 9 consecutive daily buy signals built in here. Do keep in mind, if you're looking to get in Momentum Timer Pro, there's a coupon in the description. I don't know how many are still at half off, but there's still some left. So it's got a 30-day risk-free trial if you want to check it out. We do include videos when I see interesting setups for you to follow. There's noted no position on this, but a hold of over the 200-day moving average should be bought. What I would be looking for those on the Momentum Timer Pro report is this 1-month signal, this sell minimum to go to a buy minimum. We note that on the 3-month window, this is good. So we want to see a hold over the 200-day moving average into next week. We want to see the sell minimum flip to a buy signal, putting the next upside target at 403, just a little bit above Friday's closing. Downside target 386. Let's take a look at the chart here and see what we've got. There's a lot of sellers here. We're sitting in a sell zone. That's why I say we're not out of this yet in terms of the market going higher. But if it can break out of here and the machines start to pick this up, it could cause a big move higher in the market. So you'll notice on the 6-month window where that red line in, there's your volume profile where all the sellers are at. It's the same as the 1 year. Let's go out to the 2-year mark, and there it is. So you see a break of this to the upside, successive closes over the 200-day moving average, and you've got a catalyst to pull this market way, way higher. Again, our upside signal 403, just right up into here where we've seen some prior selling. Downside signal is going to be down into where this volume is sitting at down here. So that is a good signal there. Keep an eye on that. If that's not on your hot list, it should be. Let's take a look at tech stocks. Now we've got QQQ, momentum positive. We got the RSI at 58, positive cross on the MACD. Momentum Timer Pro's got 8 consecutive daily buy signals, and we have still saying no position here. If you're looking to trade this, look for that sell mid on the 1 month right here to flip to a sell minimum before taking a position. The 3-month window looks good. We want to see a little more here. I should have added, we note that on the CTA-Timer Pro, which I keep forgetting to raise the price, so it's still $20 a month. Link in the description below. Again, 30-day free trial. The fast algorithms here are running 100% long. We saw that with and noted with Nomura, but see, you can tell here on the slower version. Now what I've done is a historical weighting on mine, whereas most of the machines don't, but you'll notice it's sold down a little bit on Friday. I expect that to flip back on Monday's report when we see that, or at least into Tuesday, but those are the ones that I really watch for, is those longer term signals here, and this is telling us that these things are kind of in a lull here, just flipping around between a slightly longer position in their current one. We note on the Nasdaq, similar positioning on the fast models, they are 100% long, and on the slower models where there's predominantly more money, they are just kind of holding position around that 35%, maybe upwards of 55% level. I'll expect that to go up again, maybe on Monday or Tuesday, particularly if the market goes up. Here we can see the Nasdaq facing a similar situation as SPY, stuck right at that 6-month volume profile in a sell zone, looking to get up here where sellers have been around this 290, 293 level. Let's go to the 1-year chart. Look, predominantly sellers right here at the 1-year mark, buyers all below, and there you have the 2-year volume profile up there. So this can break through, hit that 200-day moving average and run. You've got to move up to 317 before we see if there are sellers there as well. Let's take a look at the bond market now. What we can note is, again, Nomura, these are faster algorithms. They are cutting their short positions a bit. Longer term signals, still no major sign. I'll tell you what the signals are on that. TD Securities, they too have reduced their short positions a bit, but here's the key point. 10-year treasury yields need to fall below 3.4%. Now, last week they got to 3.4%, and that's why we saw a little bit of short covering on those models, but it really needs to sustainably break below that before we see more short covering on the CTA where they buy back those short positions. And now we can look at 20-year treasury bond ETFs, TLT. We know momentum is positive, RSI is over 54, MACD positive cross, all the things we want to see. 9 consecutive daily buy signals. If you're looking for a position, you can wait till the 1 month flips to a buy minimum, is still at a sell minimum, and the 3 month has to be at a buy minimum or higher. It's at a buy mid, so it already qualifies for that. So much like with the S&P, you're waiting for that 1 month signal to validate. And what we see is the upside target from 106 now up to 109, closing at 106.20. Downside target at 100. We note that on a historical model, and this is a really cool way to look at CTA-Timer Pro, you notice that even though none of the data I've shown you from the desks, the trading desks, show 100% long position on a fast model or 100% long position on a slow model, that's because I have a historic weighting on it, and that's what's telling you, hey, if this thing breaks higher, this is a position you want to take. So the CTA-Timer Pro is kind of give you a little bit of an edge to tell you, hey, there's some confidence here. We're telling you this should be long. We noted this same thing happened in gold. It flagged you should be long gold, long gold, long gold, and sure enough, what happened? Momentum broke to the upside. All right, let's take a look at the charts on TLT. Some of you made notes in the comments that this is getting interesting, and sure enough it is. We have a cross of the 50-day moving average. What we want to see here is a tag of that. Now this means price could go sideways. At some point we want to see that. It's got a beautiful amount of volume holding under here at 103.17 on the 6 month. Let's go out to the 1 year. We note this is where a lot of sellers, particularly machines, were dumping up there on the 1 year, and we see the 2 year way up there. But we'll zoom into the 10-day, and what do we know? The buyers are coming in here trying to hold this. We'll go to the 30-day, and they're a little bit above. So you got to see we got to break this kind of 107.7 here to the upside and to do more here. Otherwise, what you should expect to see is maybe a pull down, confirmation against the moving average, confirmation into this volume of the 6 month window, and then a takeoff from there. That's what you're looking for on that. Now let's head over and talk about the positioning on gold. We notice that gold is moving longer here. The machines are just kind of now at this point they're not adding, they're not subtracting, but they're in a position to go a whole lot longer. And what do they need to do? You need to see gold over 1950 an ounce for that to happen. And what do we know? 51 consecutive daily buy signals on Momentum Timer Pro. We announced to our subscribers on November 30th. Should be buying this at 163.69. Friday's close at 179.29. What we can see is this thing is maxed out from a momentum play, and that's not necessarily a bad thing. If you're in this trade, tighten your stops up a bit, but we have noted on our CTA report that this thing has been suggesting you be long, and it has been all over that and correct. Let's take a look at GLD and gold futures here. So here we have GLD. This thing took off in a big way. Remember, we said back here November 30th, right into here. So you grabbed that and you made a run higher. Where does this thing go? Off to the 1 year chart. Well, we got 182 up here into some resistance. If you break out of 182, you've got a chance here to get back to the 2 year highs up here in the high 180s, high 190s. Let's look at gold futures here. You get over 1950. So we're right here. You just need to go a little bit more. The machines are going to catch this in and push this higher. So it makes it still attractive, even though the momentum signals say it's played out. Well, that's why you just pull your stop losses up and in case price moves against you. All right, let's take a look now at not VanEck. We've got the dollar here. Momentum is negative on the dollar negative cross. RSI below 40. 8 consecutive daily sales signals. No position. Next upside target at 27.96. All the screens say you should be short this in a big way. If you are a short seller, or you should have been, if you're not, and many of you aren't, you shouldn't be in it. So what do we say here? UUP, this thing can go lower. That will be a catalyst for equities to go higher, bonds to go higher, and the metals to to go higher. This thing is looking pretty ugly. Could get down here into the $26 range pretty easily, and look for that on the DXY. We know that's down here right around 100 is the next move if it breaks through support here. So keep an eye on that for sure. All right, now I want to talk to you, and let's just say here, we're looking at this chart here from, that was from TD Securities, and they're noting that there's going to be some short covering on their currencies against the dollar. So that could bring the dollar down even more and those other currencies up a whole bunch. So now I want to talk about our sponsor today. You might remember them from a few weeks ago, and that is Vuzix Corporation. And yes, they're back, my friends. They were so happy with the attention that you gave their stock and how you took and did some research. And of course, we note, and this doesn't always happen. Of course, we love it when it does, but after we featured them on our show here, you note the stock went up quite a bit, which was nice, but they're back because they've still got a big short position that they're looking to crush. So here you see Vuzix Corporation, symbol VUZI. You might remember them. We'll give you those same 7 reasons before. They're an augmented reality company that's likely to transform how we work, play, shop, and connect with the world. And we know that augmented reality, whether or not people want to wear goggles over their screen at home, it's going to happen in the workplace for sure in a big way and across all types of industries. We know that this technology is going to be in the future, and they're one of the leaders of this for sure. They were founded in 1997. They're an optical technology company engaged in the design, manufacturing, marketing, and sale of these components, particularly smart glasses and augmented reality solutions, being, as I said, an industry leader. Symbol VUZI. We'll look at the chart in a minute. Here we've got James McIlray, a CFA from Dawson James Security. He's got a $15 price target on that. And boy, if it reached that, we're talking a big move in the stock back from when it was at $3.76. That'd be an upside potential of nearly 300%. But due to the recent move, that's down a little bit. But in terms of return potential, but it is still particularly large if that was to happen. We also note that there is a big short position on this, and we'll look at that on the chart. According to MarketWatch.com, on January 5th, they're now listed as one of the top 50 stocks with the largest proportions of outstanding shares currently sold short. Of course, we love that because if you can squeeze out those shorts, as many of you know, stocks can go really high, really fast. All right, let's continue, because before we get into the chart, the shareholder base is largely institutional owned, almost half. That means the public float isn't that big, and this means if that part of the float is heavy short, there's a big potential to squeeze them out. They've got zero debt and a strong cash position, so they're not looking to issue shares to raise money here, which is great. Let's take a look at the charts, and what do we see here with Vuzi? There's that 6-month volume profile. They've got a beautiful cross over the 50-day through the 21-day there in red, and it's looking, anytime you have a move up, you should expect a pullback, and then hopefully buyers come in and take this higher. Let's take a look at the 1-year chart again. You'll notice where the squeeze is at. You can see sellers above there at the 6-month, at the 1 month or 1 year, at the 2-year. How about 5-year? Oh, slightly below. So you can see shares being accumulated right at the level that we first announced this on our channel, right thereabouts. It's gone up, and boy, you can tell they're eager to break out those short, and you can see them even in the last 90 days. There they are, sitting there right up at that low $5 mark. Let's go into the last 10 days, and now you can see this pullback here has been bought, and of course, we can note that this makes Vuzi a potentially interesting stock. Now, of course, with anything we show on the show, you need to do your own research before you make a purchase on it. But as you can see, it's still what I think a pretty attractive position. Of course, we want to thank Vuzi for being on our show once before, and what we've seen with their stock already. Well, if they can break those shorts that are sitting at that 6-month, 1-year, and 2-year window, well, there's no telling how high the stock might go. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.